Hello and welcome to this session. This is Farhat. In this session, we would look at revenue recognition for sale of assets, permits, and license revenues for governmental entities. Now, government, they need any sort of revenue they can get to operate. And they could generate revenues through asset sales, investments, and licenses. And in this session, we will discuss briefly how do government account for these type of transactions. If they sold an asset, they have investments, or they issue a license or permit. Let's go ahead and get started.
Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
First, let's start with purchase/sale of a government asset. So first I'm going to buy the asset, then I'm going to go ahead and sell it. Now when we say an asset, what could be an asset for the government? A vehicle, a police car, police vehicle. It could be a truck, it could be a building, it could be a piece of land. Now first we are going to buy it, so when the government sells an asset, the accounting treatment varies based on the type of financial statement. And here we're going to be assuming we're still working with the modified accrual, the fund accounting, but in this session I'm going to show you briefly the accrual, the government-wide, just to kind of show you the difference between the two. I think it will be helpful. On December 31st, Act 7, a city purchases a police car for $40,000. Now, and 2 days later, the car is totaled and sold for $5,000, and for the sake of simplicity, the vehicle was uninsured. That's not even possible, but just to keep the accounting simple. So at the time of the purchase, what do we do from a governmental fund? From a governmental fund, we will debit expenditure. Remember, this is not an asset as far as the governmental fund is concerned, $40,000. Debit car and credit cash, $40,000. That's that. Now, on a government-wide financial statement, this is where we actually put the asset. We debit a vehicle, credit cash. So I'm just showing you the governmental and the government-wide financial statement. Remember, 2 days later, the vehicle was totaled. It got into an accident, which is very possible. The sale is recorded as an inflow of financial resources. So the government received $5,000 for that car. They will debit cash, credit other financing sources. What's going to happen is this $5,000 will increase the fund balance. You might be saying, wow, they sold an asset at a loss, but they increased the fund balance. Yes, because what they did when they purchased the asset, the fund balance was reduced by $40,000. Therefore, yes, it's a revenue when we sold the asset, and it's expenditure when we bought it. This is as far as governmental fund accounting. Now, for government-wide financial statement, you should know how to do this. It's accrual, regular accounting. We debit cash $5,000. Credit the vehicle, get rid of the vehicle, and the difference is a $35,000 loss. We would record the loss on the government-wide financial statement because they use accrual accounting. So remember, when the government sells an asset, it's in other financing sources. This is the whole point I'm trying to make. It's a form of revenue for them. It's a form of revenue. Although they sold it at a loss, but that's not how they look at things because they're not comparing the original cost basis. They have no basis for that vehicle. The governmental fund, what they did is they had an expenditure when they purchased it, and they have a revenue when they sold it. That's as far as they're concerned. The government-wide financial statement, it's different. They recognize an asset. It has a basis. When we sold it, we compare what we sold it for what we sold it for today basis or adjusted basis. In this situation, we did not have any adjustments. What should you do now? Go to Farhat Lectures, look at additional resources, multiple choice, additional lectures. That's going to help you whether you are a student taking governmental and not-for-profit accounting or a CPA exam candidate studying for your CPA exam. Invest in yourself. Good luck and stay safe.